Hi there, everyone. This is Jenny Clark, the GovCon CFO. My company is Solvability, and anything I'm talking about today, you can go to solvability.com to get more information. My goal is to teach small businesses in federal contracting the math of government contracting, what you need to know to price federal contract bids. This is mostly applicable to those in professional services those that are selling services to the federal government. So it's a little bit of accounting, it's a lot of math, but my goal is to show you how to use these tools that I've created so you can apply them on your next bid because I want you to win. I want you to understand that you have covered all of your cost and you've got a profit coming in. I also want you to have the flexibility to know if this is a really important bid for us to win, we need to understand our rates and we need to understand what we can tweak to be more competitive on price. Because what matters is that you win. So let's get started. I have a spreadsheet that I've been using for many years that I call generically my RPM, rate and pricing model. The rate and pricing model has a number of different spreadsheets, and today we're going to talk about the one that I call the wrap rate calculator. We're going to talk about indirect rate summary, and it's really to give you the background behind the wrap rate calculator. Do I expect you to understand all of this from this one video? No, but the idea is to help you build off of foundations and keep learning on about how this works. The third tab I'm going to tell you, you're going to go, whoa, that looks like an accounting spreadsheet. I don't like that. It's worrying me, but I want to make it simple for you because there are structures that are fairly standardized in how federal contractors price, and they're based on the rules in the Federal Acquisition Regulation. They're called cost principles, and they're also based on Defense Contract Audit Agency, DCAA compliance. But first, I want you to get a contract and understand how to price. And as you grow, you implement these structures in your accounting software. Do you need them immediately? No, you need to know how to do your bid, right? Let's get started. Okay, so what I've got in front of us on the very first spreadsheet is called the wrap rate calculator. Wrap rate. There's so many different names for wrap rates. They call them fully burdened rates, they call it multipliers, they call it fully burdened labor, loaded labor, all kinds of things. And it's just like the terms on-site and off-site, because I don't know if you've ever been in the room and somebody says off-site, somebody else says on-site, and they're talking about, is that working in a government facility or is that working in our offices? Got to get that terminology straight in your organization because it's not universal, honestly. Okay, so wrap rate calculator, here's what we're doing. Whenever you're pricing a federal contract, think about it. You're saying, here's how many hours it's going to take of this kind of skill set. That skill set is called a labor category. That's how they generally group them. And the labor categories usually have requirements, or it might be that you use the labor categories that you have inside your company. It depends on the proposal and how it needs to be priced. But here's how I think about it. If I am a program manager, I'm going to get a list of the skills that are listed in the proposal because they'll usually have a template that you're filling out. I'll look at the description of the labor categories and say, oh, okay, I've got these people, these resumes. That's what it would be. I kind of know what they're going to be paid in order to bring them on board. Some of these people we might have on board, whatever that case is, that program manager, that planner for the estimator for the pricing exercise is going to say this many hours, maybe of this individual, and the labor category they're going to go in, how many hours pretty much broken out by a CLIN or a year, a contract year, different pieces of that. Here's what the wrap rate calculator does. Okay, I know that I've got 100 hours of a senior engineer. I know what I pay that person, or I would pay them if they were hired for this contract in that location for this particular agency. But you know what? When I bring them on board, I'm also going to be paying them fringe benefits. Now, some of these aren't benefits, they're required. They're payroll taxes, Social Security, Medicare, federal unemployment tax, state unemployment tax, workers' comp. That segment of payroll tax you've got to cover in this calculation, right? Because you know you're paying it. The next layer of that fringe is going to be paid leave. When you're small, you may not be paying people for vacation. You're likely going to be paying them for holiday if they're full time because your organization is not going to be working on those days. You have to build that into your rates so you know you've got their holiday pay covered, right? You can have other types of paid leave besides that, but I usually call it just PTO and holiday. The other piece that you have are the benefits that you're offering to your employees. Generally speaking, that's the company paid expense of your health insurance. If you've got long-term disability, life, dental, vision, whatever that is, if you've got a 401k plan, it's going to be the 401k match. And you can see how these benefits are going to change as your company grows. So my purpose in showing you this wrap rate calculator is so that what you do to price today can change as you grow because your cost structure changes with growth. As you bring in the contracts, you start earning the revenue and you start bringing on more people. So fringe is the first element. In this example, which I have oversimplified, and I made it work this specific way because I wanted it to be simple so you could remember it. I said fringe is 21.6%. And here's where I came up with that. I know I'm going to pay payroll taxes. That's probably 8 or 9%. Workers' comp, I have to have it a certain level. And then my leave, I just said, okay, I'm just going to call it 10% for payroll taxes and 10% for leave and a little bit more. And I just mathematically made it be 21.6 because down at the bottom, when I finish this, I want to show you that the wrap rate multiplier is going to come to exactly 1.5. Okay. So in the blue, I've got fringe 21.6%. What else do I have to pay for when I onboard that senior engineer that's going to work on this contract when we win it? We've got a category called overhead. Overhead is the technical support required for your technical workforce. I didn't quite say that right, but what I'm really saying is I had to recruit and hire that person. I use tools to do that. I might have to have recruiting software to do it. I might have to have the account set up on Indeed, all kinds of things like that. Recruiting's a big piece of it. Having the websites to do the searches. If you've got people that have security clearances, a facility security officer to cover their clearances, things like that, it could be part of your overhead cost. It could be training, it could be certification, all of those things that you would need in your operation. As your company grows, you might have different layers of that program management activity. If you're doing a lot of AI, you might have software tools that are shared software tools for the company that those senior engineers use to deliver the work. That's what overhead is. It's what cost you have to spend to support your technical workforce. In this case, I just said 2%. That usually means that they're working from home or they're not working in a government facility, something like that. But you're not paying a lot for office space to support them. And for most people, they are working on a remote basis. So 2% is just a good number that I picked. And again, I picked all of these numbers so it would come out to this magic 1.5 so you could remember a little bit about how I came up with that number. The third element in green is called G&A. G&A stands for general and administrative. General and administrative is corporate. It's your back office. It's everything that you need to build to run your organization. When you're small, you got started, you opened a bank account, so you got banking. You've got legal because you set up your company. You've got your own pay if you're the CEO or the executive, because in order to build up this company, at some point, you're not going to be working direct and you'll be running the company, and that's corporate expense. Other common corporate expenses are accounting, human resources, um, your payroll software, things like that are all part of running the company. Accounting software is the biggest piece of this. As you grow, you have to have more advanced accounting practices. Okay, so just to recap that, fringe is payroll taxes, leave, and benefits. Overhead is the cost of your technical workforce, the support cost for your technical workforce, and G&A is corporate, back office, headquarter cost. So those are percentages. And then the next element that I'm looking at is fee. That's the profit. They don't call it profit, they call it fee, but it's the same thing. And with that, there are kind of going rates for fee depending on the type of contract. Cost plus contracts go from 6 to 8%. T&M might be 8 to 10, fixed price might be 10 to 12, and it could be all over the place, but you want to know what those percentages are as you're learning how to apply this. So here's the math. Everybody ready? Okay. For every dollar of direct labor, I'm going to add 21.6% fringe. Overhead is calculated on top of direct labor plus fringe. We're going to add those two together. G&A is applied on all of the above. So G&A goes on top of direct labor, fringe, and overhead. All three of those elements get G&A percentage applied. Then we get what's called total cost, and we apply fee on top of total cost. And that's going to give us what I call a wrap rate or a multiplier. So let me just show you inside my spreadsheet. I've got $1 worth of direct labor. My calculation underneath here is direct labor times the fringe benefit percentage of 21.6%. That 21.6% comes out to 0.2158. Overhead. Overhead, a little trickier, goes on those two elements. It goes on direct labor plus fringe times the 2% for overhead. So what that means is these two numbers added together come to 1.2158 times 2%. That's 0.0244. The next element, G&A, adds together all three of those numbers and multiplies it times 12%. So for every dollar of direct labor, I'm adding those extra, they call them burdens, on top, and I get total cost of 1.389 or 1.4. Okay, we're ready for fee, profit. This is how you make money, because unless you're making profit, you have no cash flow coming out of your company, and you want to avoid that situation. On the other hand, it's important to win a contract. Okay, so fee is calculated on top of total cost. I add those two numbers together, total cost plus fee, and it gives me a wrap rate multiplier of 1.5. So what does that mean? How do I use that? Here's how you use it. Remember we talked about that senior engineer. Okay, I'm just going to say that I found a senior engineer that was going to cost me about $100,000 a year. 100,000 divided by 2,080, and 2,080 is 52 weeks times 40. Take the annual salary divided by 2,080, and I'm going to pay them, in this case, if I make this exactly 100,000, oh, that's not going to work. I type in the employee pay rate. It's probably less than $50 an hour to get to 100,000. Sometimes I just play with this till I get the number I want. That's why I created this calculator, because I'm always playing with it to see what do I get to. Eh, I like precision. There we go. That's close. $48.08 per hour is about $100,000 a year. That's what I'm going to pay the employee. And so, what I want to find out from that is if I need to cover all of my cost and that 8% target fee, my billing rate for that labor category, that position, needs to be at least $72.12 an hour. So in this example, what I'm saying is I know the employee's pay rate, so I just type it in. It tells me what I've got to be. Well, let's pretend I gave that offer of $100,000 to the senior engineer. He's like, I'm not even returning that phone call. And I find out, do a little research, figure out, well, for that area, for this skill level, for the demand on that particular position, and actually making an offer to somebody that we know will make us help us win this contract, I got to pay a little bit more. Let's say it's 72 bucks an hour. My billing rate, in order to earn all of my fringe overhead G&A and fee, got to be over $100 an hour, 108.01. Okay, hope you're with me so far. Sometimes I don't know what to pay the employee, but here's what I do know. We bid that contract, we won it. We're a subcontractor. And the subcontract that we negotiated with our prime that was based on what we bid, and then on top of it, how they cut our price back a little bit. They said, well, we're not going to give you that labor category. I know that that's what we agreed to earlier, but there's a new sheriff in town and we're not doing it that way. When that happens, sometimes you need to know the billing rate for that labor category. Okay, so let's pretend that the billing rate, I don't know, is 120 an hour. This section where I've typed in the billing rate takes 120 an hour divided by that 1.5 and gives me about 80 bucks an hour. The whole point of what I'm doing with my wrap rate calculator to share with you today is that we want to give you a tool, help you create a tool so that you can put something like this on your desktop and use it over and over for different scenarios because every single scenario is different. You know how I came up with this? Many years ago, I started a new job and I didn't understand a lot of this math. And I would keep going to my boss and he'd give me a little bit of information. And I basically wrote myself my own spreadsheets because I couldn't remember it. And when I did that and I put it on my desktop, if somebody walked down the hall and said, hey, we just won that contract. We're going to hire a guy. How much can we pay him? It made me look like I was really smart if I'd say, what's his labor category? And they'd say that. And then they say, well, I'd say, well, what's the billing rate on that labor category? Because the PM always knew that answer. And I would type that in and I'd go, hey, well, if the billing rate for that labor category is 127.22, to stick with what we plan to make on that project, I would recommend that you say around 85 bucks an hour. That gave the PM a parameter to go higher. And that's what's important is this is also a communication tool. Okay, so we're still talking about the wrap rate calculators. A couple other things I want to share with you on this. I didn't really explain to you very well how you can adjust this. So over here, I'm pulling these indirect rates from another spreadsheet. Now, sometimes what I do is make a copy of this and I slide it over here because I just want something quick that I can work with, right? And these are linked cells. I don't want to change them over here, so I'll change them here. Let's pretend, and it didn't link correctly, so that's why it's got weird numbers. Okay, so I'm just going to type over and I'm going to say, you know what? We are brand new. I'm not paying anybody leave. Most of the people are going to be are not going to be full time. And they get it. They get where we are. So I'm going to put fringe at 15%. I know it'll cover my payroll taxes. There might be a little bit of other benefits I could offer. Overhead, I have no idea what to charge to overhead. So, um, I asked around and talked to people, and Jenny said 2%. I have no idea. I'm just going to pop 2% in here. G&A. Okay, I'm super small. I have a lot of corporate expenses, but I don't have a lot of business base to spread it over. If I put what my real G&A is, like 60%, whoo, this is not going to be competitive. Bid for where you're going to be. Because when you win that contract, the additional revenue, the additional headcount, everything inside the business makes it possible that you're not going to get to 12% G&A probably. When you're starting out, it might be 20%. It could be 15%. You just have to make a judgment call based on what you think. And, this is a little bit of a kind of a guessing game. So anyway, what I did is I said, okay, I think it's only going to be 15% overhead, 2%, and I think it's going to be 25% G&A because I got to cover accounting system, HR, all of these things that I have to buy to get set up. So now my wrap rate becomes 15.36. And by the way, this turns out I'm bidding it on a T&M contract. It's not a contract. We're going to be a subcontractor. And I have had conversations with that prime or people that work for that prime, or I called a buddy, whatever it is. But I feel like we can go a little bit higher on this fee, T&M anyway, 12%. And I also know that as a small business, my expenses, my cost, my bill rate is way lower than the prime. So as long as they've got a way that they can take my billing rate, mark it up, and bill it on the government contract in the end, they're going to be happy. They've got a skill set they can't get to. They've got somebody they can call that's doing a portion of the work, and they're happy. So, anyway, what I'm trying to show you is even though over here these are linked, sometimes I just want to play around with the numbers to see what they are. And I'm just going to say, I think I deserve 15% fee because I'm actually the only one in this community that has this skill set and understands the customer like that. And I'm just going to see what it looks like. We're just playing. Remember, we're just playing. So again, what it's telling me down here is my billing rate, where I said a minute ago, 127.22. What this is doing is dividing the billing rate by the wrap rate number and calculating what I can afford to pay that person. The salary is just the pay rate times 2,080 hours. Same thing over here. If I know that I've got to pay the employee $76 an hour, 150, $160,000 a year, it's going to tell me what the pay rate is. And these are important to understand ranges, but on all of this, you don't have to understand all of this at once. So that's the wrap rate calculator. This is the basis for how pricing works in federal contracting, and it works this way in other industries. They just don't call it that. So if this has been helpful for you, I'd invite you to go to solvability.com and check out my website. You can also reach out to me on my website, or you can send me an email. You can even text me. If this is useful for you, I'd love to hear from you. And for that, just send me a text. We'll set up a 15-minute call and would love to get your feedback on this. So thank you so much for joining us today to talk about the wrap rate calculator. And I look forward to talking to you if this is something that resonated with you, and if you'd like to talk about how to learn more.